Okay, there's a lot going on. As you know, President Trump came on while we were live on air yesterday and pressed pause and said pause on the tariff implementation. Now, mind you, there is still a baseline 10% tariff. So there are still 10% tariffs across the board. China is still going to have a massive amount of tariffs on them. But for Vietnam and South Korea and Madagascar and Japan, we are seeing a pause. The volatility is not going away anytime soon. I'm not even going to do a play-by-play on the market right now because the market is so up and so down and so all over the place. It's up and it's down. If I say one thing, it's going to be outdated 5 minutes from now. It is so volatile. Instead, I want to bring you into the room based on some public reporting and stuff that I've known privately, but I wasn't going to talk about publicly until, of course, it was publicly reported. And it has been publicly reported by Jonathan Swan and the New York Times and many people, which is the element of who else got a vote. Now, typically, when situations like this occur, the Treasury Secretary gets a vote, the Vice President gets a vote, the President gets a vote, but something else got a vote of whether or not to pause the 90-day tariffs. And that is the bond market. You hear a lot about stocks. We talk a lot about whether Nvidia is up or Apple is up, and you hear that all the time on CNBC. You hear a lot about gold. We have some great gold partners on this program. Or cryptocurrency. But a massive part of the market you don't hear about are bonds. What is a bond? A bond is a type of a long-term security. You loan somebody or something money and they pay you back over a period of several years. So companies issue bonds. Cities famously issue bonds, municipal bonds. In fact, they're tax-free. And most importantly, our own government, the United States government, issues trillions and trillions and trillions of dollars in bonds. Now, they are considered to be the safest investment. Why? Well, because it's backed by the full faith and credit of the United States. There are 4 types of bonds. There are Treasury bills, otherwise known as T-bills. They're very short term, and you do not get what is called a coupon. A coupon is basically money back on your investment in the bond. Then there's something called Treasury notes, which are 2 to 10 years. They do pay interest about every 6 months. They're very popular with individual investors and institutions. Then we have something called Treasury bonds, which mature over 20 to 30 years. They pay interest or a coupon every 6 months, and they're often used by pension funds or long-term investors. And then we have TIPS, Treasury Inflation Protection Securities, which principal adjusts with inflation measured by the Consumer Price Index, CPI, and interest payments rise if inflation rises if inflation rises. Okay. So typically bonds are a safe refuge during turmoil. If all of a sudden the markets get a little jittery, you go to the bond market. When you hear about the federal government running a deficit, the way we finance that deficit is through bonds. The U.S. government sells a treasury bond, which takes in money, and now in return for a promise to pay interest over some period of time. There are, again, as I mentioned, short-term and long-term treasury bonds. The interest you earn on these bonds fluctuate according to the market. Well, U.S. treasury bonds are hugely influential on the entire global market. The United States government has never defaulted on its debt. Traditionally, U.S. bonds are considered the most ultra-safe investment there is. They are the floor of the market. A common idea is this: never invest in something that is likely to underperform treasury bonds. One of the reasons why Scott Bessent was selected as Treasury Secretary is he is a bond expert. He understands the bond market better than anybody else. Scott Bessent understands what moves bond prices. And what was happening from late Tuesday night to early Wednesday morning was a very good 10-year auction, but a disturbing spike in bond prices and a disturbing spike in bond activity, which China was playing their nuclear card, which is what set President Trump off so much. One of the reasons why President Trump said China is not exempt and we're going to unite the entire world against China is China was intentionally trying to create a run on American bonds. China was intentionally, dare I say, playing with the idea of collapsing the American bond market. Bonds have collapsed. The bond market has collapsed more government than howitzers, missiles, or bullets. Famously, of course, the Russian default, 1998. The Russian government collapsed and they defaulted on $40 billion of domestic debt and devalued the ruble. The yields on short-term Russian treasury bills, otherwise known as GKOs, skyrocketed as investors fled the market. Argentina in 2001 had a sovereign default. Argentina defaulted on over $100 billion in sovereign debt, the largest default in history at that time. The bond collapse resulted in Argentinian bond prices plummeting and yield spikes over 30%. Capital fled the country, and of course, the peso collapsed. You might remember back in 2010, the Greek Eurozone debt crisis. Greece revealed that it has been underreporting its deficit, causing investors to panic and dump Greek government bonds. Greek 10-year bond yields soared past 35%, making it impossible for Greece to borrow on the open market. Greece had to be bailed out by the EU and the IMF under strict austerity terms. There's examples after examples of countries that are collapsing because of the mismanagement of their bond market. When countries can't sell bonds, they have to resort to other means of paying their bills, like devaluing their currency and hyperinflation. And what we were seeing and what we were afraid of on the horizon was a run on the bond market, was potentially the American economic established order very well could have had a financial crisis similar to that of 2020 or 2008. President Trump made a very prudent move, and China played their strongest card. Now, understand, Scott Bessent said that the 10-year auction was actually very good, which is interesting, which means that people are betting on the long-term viability and the long-term prosperity of this country. They're happy to say, okay, I'll do a 10-year bet, but a 6-month bet, I don't know. Basically, people are long on America when it comes through over a decade, but in the next 3 to 6 months, I'm not so sure because of all these tariffs. And tariffs were the forcing function to actually get people to go away from treasury bonds, which is incredibly complicated and somewhat contradictory, because typically when the economy is during a moment of jitters, people go to treasury bonds. So it makes it even more complicated. All that to say is that the bond market has a vote. Let's play cut 235.
Secretary, how much of this decision was driven by the bond market cratering overnight? What is happening with bonds? Is China selling their bonds?
I have nothing that says that, and we actually had quite a good 10-year auction today, and all this was, again, this was driven by the president's strategy. He and I had a long talk on Sunday, and this was his strategy all along, and that, you might even say that he goaded China into a bad position. They responded. They have shown themselves to the world to be the bad actors.
This is incredibly complicated stuff. All this to say, the way we finance our government is through a bond. A bond note is like an IOU note. It's an IOU that the government can then give to people where it needs to pay back. When you buy a bond, you're lending them money, and they promise to pay you back later with interest. When the bond market gets disrupted, the entire funding of our government can get put into jeopardy. Spring into action this season. It's time to put American meat on your table and support the ranchers who've been feeding this country for generations. GoodRanchers.com delivers high-quality American-raised meat to your doorstep. And right now, you can get free bacon, ground beef, seed oil-free chicken nuggets, or salmon for a year, then $40 off, a discount they've never offered before. Head to GoodRanchers.com and show your support for American ranchers today. Good Ranchers, American meat delivered. I want to play more pieces of tape here. There is a fair amount of volatility and uncertainty that's happening in the international capital markets. The old way of thinking, though, was that we do not question or challenge the offshoring of American labor, of labor internationally. that it's a good thing that China gets wealthier and that we are financing it and we are funding it. And all the right people are speaking out against the Chinese aspect. Here's John Bolton, who is dreaming of a ground war against Iran, saying the following, play cut 174.
What Trump is doing is a huge opportunity for China worldwide. These tariffs are a form of economic illiteracy. Trump has no idea really what he's talking about. He doesn't understand how tariffs works. So what he's doing has put us in a very vulnerable position, and probably in the worst position possible. And it's just sad and depressing that more Republicans haven't stood up and said that. This is illiteracy.
You know what was the illiteracy, John Bolton? The fact that you designed probably one of the most immoral wars in American history, if not the most, when you designed the invasion of a sovereign country of Iraq. That was illiteracy, and that was outright immorality. John Bolton and the neoconservatives don't like this because President Trump is getting more without war. He's getting more through economic means than mobilizing aircraft carriers or spending unnecessary $1 trillion on needless wars. But understand what President Trump is doing is so brilliant. So we got China on defense. We got the entire free world that is coming to negotiate deals. And meanwhile, where's Pete Hegseth? This is my favorite wrinkle of the entire story. Where is Pete Hegseth? When you are trying to challenge a rising global power and a rising empire, a rule is that the empire will not care as much about their colonies as they do the homeland. So you go right after the colony to liberate it and bring it back under our hemisphere. What are we talking about? We're talking about the Panama Canal. It is perfect timing. It is 10 out of 10 timing what Pete Hegseth is doing. Pete Hegseth goes down to the Panama Canal and says, this is not China's. We are going to liberate it. Play cut 179.
I want to be very clear. China did not build this canal. China does not operate this canal. And China will not weaponize this canal. Together with Panama in the lead, we will keep the canal secure and available for all nations through the deterrent power of the strongest, most effective, and most lethal fighting force in the world. We will do this in partnership with Panama. Together, we will take back the Panama Canal from China's influence. And we will do this along with other capable, like-minded allies and partners. This is what peace through strength looks like.
Look, we know that the Panama Canal connects the Atlantic and the Pacific Ocean. It's an incredible engineering feat and accomplishment. That which thousands of Americans died to actually make possible. 5% of all global maritime trade goes through the Panama Canal. Not having control of the Panama Canal is a major security risk to the Western Hemisphere. China's growing influence in Panama through all of their state-owned companies means that they could choke point necessary trade and commerce in our hemisphere. And we know what China does. They operate through economic coercion and dependence. So they take control of the Panama Canal. They then have leverage in our hemisphere. And we are kicking the Chinese Communist Party out of the Panama Canal. But it's a perfect time to do it because China's on defense. China is seeing a domestic stock market collapse. China is seeing all of a sudden their number one export partner, the United States of America, is saying, time out, we're actually not going to do this anymore, 104% tariff, and it's only going to go up. So China has to prioritize which fight they are going to pick. And at that moment, you strike for the Panama Canal. You strike for the choke point, which is exactly what Pete Hegseth is doing. Saying we're not going to put up with the Chinese Communist Party hegemony over the choke point of trade between the Pacific and the Atlantic. That is not going to happen under President Trump's watch. And the Chinese are probably like, look, we got 9 different fights on here. Fine, let them have the Panama Canal. They're not going to give it up that easily, but the Chinese Communist Party has to triage which of the many problems they're going to fight on right now. And the one that the CCP is most worried about is Lao Beijing, the people of China, might be rising up because of a domestic economic collapse brought to you by Trump's tariffs.